The time that the XRP army has been anticipating may finally here, ladies and gentlemen. Behind the scenes, a silent financial revolution is taking place, while the mainstream media has everyone obsessed with Bitcoin ETFs and the upcoming halving cycle. Neither Bloomberg nor CNBC are discussing it. However, a pattern has begun to emerge among individuals who are closely examining the fine print of business filings, executive hiring, and digital asset strategies. This pattern immediately identifies BlackRock, the largest asset management in the world and a digital bridge currency created for worldwide liquidity, XRP. Let's begin at the highest level. BlackRock owns assets worth more than $10 trillion. To put that into context, BlackRock would rank third in the world in terms of GDP if it were a nation, right behind China and the United States. The world therefore takes notice when BlackRock moves. BlackRock has made a significant push into the digital asset market over the past year, initially with Bitcoin ETFs, then with tokenization research, and now most importantly with the creation of settlement infrastructure. Here's the catch though. Regarding the technologies that underpin this new digital financial system, they have been remarkably silent. BlackRock has mentioned creating next-generation settlement rails and digital asset liquidity networks for institutional clients in a number of internal job advertisements and investor briefings. What does that signify? It indicates that they are going beyond ETFs. Everything is getting ready to be digitalized. Assets such as government debt, stocks, bonds, commodities, and real estate onto blockchain-based systems. Here's the issue they have though. All of these tokenized assets cannot be connected by a single neutral bridge that can immediately settle transactions across borders, currencies, and regulatory zones. Bitcoin is unable to do it. Ethereum is excessively costly and slow. What's left, then? The only digital currency created especially for immediate cross-border value transfers with institutional liquidity at its heart is XRP. Let's make the connection now. In 2019, Ripple subtly revealed that it was growing its alliances with significant liquidity providers and institutional investors. Meanwhile, a former director of BlackRock joined the board of Ripple. His part, strategy for institutional acceptance. You're right, one by one. In order to provide guidance on expanding enterprise usage of the XRP ledger, a senior architect of BlackRock's internal portfolio management systems relocated to Ripple. Is it a coincidence? Perhaps. However, the time is ideal for BlackRock's own open investigation into blockchain settlement. Over the past few months, astute analysts have observed another development, a minor upgrade that highlights real-time cross-ledger liquidity management as a key function for BlackRock Digital Holdings, the company's digital asset division. Cross-ledger liquidity is precisely what XRP was designed to do. Using XRP as a bridge between fiat currencies, banks, payment processors, and remittance firms are already connected by Ripple's on-demand liquidity, or ODL, solution. It is scalable, affordable, and quick. It is therefore easy to see where this is going when BlackRock states that in order to transfer trillions of dollars between tokenized marketplaces, an institutional-grade compliant liquidity mechanism is required. When we include the central bank digital currency, or CBDC, revolution, the story becomes even more compelling. Governments everywhere are rushing to digitize their currencies, but these CBDCs won't be able to communicate with one another automatically. Through pilot programs with more than 20 central banks, Ripple has been positioning XRP for that role. The digital dollar, digital euro, and digital yuan will all exist on different systems. Someone will need to bridge them. What's trending if it's BlackRock? It oversees institutional liquidity, pension funds, and sovereign wealth funds for those same governments. When it combines its digital asset infrastructure with Ripple's CBDC solutions, XRP takes over as the global settlement layer for both public and private money flows. At this point, the narrative shifts from being intriguing to quite honestly devastating. There might be $100 billion in transactional demand if XRP takes the lead as the preferred settlement asset for even a small portion of BlackRock's managed liquidity, say 1% of its $10 trillion portfolio. Bitcoin's ETF inflows appear insignificant when you consider the scope of tokenized treasuries, derivatives, and real estate. In fact, the math speaks for itself. Analysts have long conjectured that XRP's price potential is linked to utility and liquidity debt rather than hype. A $100 price objective isn't a meme if BlackRock actually uses XRP for settlement. Based on the requirements for volume, velocity, and liquidity, it is mathematically inevitable. Let's take a break and discuss psychology. The largest financial firms don't follow fads. They develop covertly, amass gradually, and come to light only when it is too late for the typical investor to invest early. That is precisely what we are witnessing. Institutions are constructing the pipelines of a new global financial system as individual traders quarrel on social media. Blockchain developers are needed. Digital subsidiaries are being registered by them. They are submitting tokenization model patent applications. At the core of it all is their alignment with technologies that genuinely address issues. Real-world liquidity solutions, not speculative meme coins. XRP is a wonderful fit for that description. You might recall what transpired at the start of the Bitcoin ETF story. Insiders positioned themselves months before the official announcement. The price of Bitcoin then skyrocketed once BlackRock's ETF filing appeared on the SEC's website. Imagine the same situation now, but without the speculation. It has to do with infrastructure. The market reaction might make the ETF surge appear like a warm-up if it is revealed that BlackRock, or one of its significant custodian partners, is incorporating XRP into its digital settlement infrastructure. The CEO of BlackRock, Larry Fink, stated at a recent investor conference that the future generation of markets will be tokenized, which was the most significant indication. Every transaction, asset, and liability will be digitized. He underlined that this change would be characterized by effectiveness, openness, and worldwide interoperability. Now consider the final word, interoperability. That has already been resolved at scale by a single blockchain ecosystem. The XRP ledger from Ripple has built-in liquidity bridges, federated sidechains, and DEX. Where does all of this lead then? A single neutral settlement layer, or digital standard, will be required as a result of the convergence of institutional adoption, central bank digital currencies, and tokenized markets. BlackRock has always focused on scale and efficiency. They are leading the tokenization era after being pioneers of the ETF revolution. Additionally, tokenization will liberate quadrillions of dollars in global liquidity, much like ETFs unlock trillions in passive investments. XRP was created specifically to serve that purpose, to transfer value at the rate of information. The startling thing is that all of the signals are concealed. Convergence is shown by BlackRock's recent blockchain recruitment, Ripple's recent alliances with central institutions, and even the subtle reference to quick settlement APIs in business presentations. Although no one has stated it formally yet, I'm a lousy Banson. Farewell, Spore Ban. Although the infrastructure is aligning, I am aware of one. The question is not whether BlackRock will use XRP, but rather when they will be clean about it, and on that day, necessity rather than speculation will drive the price activity. XRP will need to move value effectively in order to support global liquidity flows. It will be held by market makers, it will be managed by custodians, it will be integrated by central banks. Additionally, retail investors who were among the first to see the vision will now comprehend the rationale behind the construction of this digital asset. Therefore, everyone watching should realize that we are on the verge of the largest financial revolution in modern history, that the smart money has already moved, that the infrastructure is being built covertly beneath our noses, and that BlackRock's involvement indicates that this is a restructuring of global finance rather than just a game of retail speculation. It will be crucial in the upcoming months. The breadcrumbs are minor notifications, such as a pilot project here, a strategic alliance there, or an update on a regulatory file. Keep an eye on them because, like the Bitcoin ETF, it will move from rumor to confirmation overnight when the whole story comes to light. And the world will be awakened to a new financial reality once it is officially announced that BlackRock is using XRP as part of its tokenized settlement network, one in which the antiquated, disjointed systems of the past are replaced by speed, liquidity, and interoperability. So consider this: are you ready? Because the next trillion-dollar change is already underway, while the general public is preoccupied with headlines. XRP is positioned to be the beating heart of the digital asset revolution. This is the cornerstone of the new global economy, not only larger than the ETF. Remain alert, knowledgeable, and as always focused on the main plot. Disclaimer: please keep